So officially, happy Friday. Welcome out, everyone, to the Options Income Launchpad weekly market wrap. My name is Scott. I will be your host. As always, keep in mind that what we do is for education and illustrative purposes only. Nothing we do or say should be considered or construed as a recommendation to buy or sell any security or financial product. We're not brokers. We're not advisors. Decisions made should be done at your own risk. Yada, yada. What are we going to do today? We'll talk about today's market. Where did the selling pressure come from? How are we assessing that pressure? What do we think comes next? We'll revisit our posture and think about what the implications are. I have a feeling that we're going to see both. I think we may see a 0.5 point decline on our VIX. One is a lag. It's an overdue one, and one is possibly new. I think volume is going to probably drop to a tie. We were slightly ahead. It was a tie, and a tie leads to a positive score. So what I'm saying is we may have a tie on the score, a 0. I don't think it'll be terrible, but I definitely think it's going to be indicative of seeing some changing in the conditions. So we'll look at today's market. We'll revisit our posture. Trades being carried over the weekend. I have a feeling people were probably booking some gains prior to the weekend. If you had some gains, you probably tightened some stops. You maybe will carry a couple things depending, but that's my thought. Looking for what the new and next opportunities in the market are likely to be. We're still going to be bullish. This is still going to be in position to set up for a higher low, but anytime it's an escalation in trade war news, I think there's some danger that it may become persistent. Okay, what do we think about for next week? What about the opportunity list, and what about our trading plan progress? That's our mission that we have chosen to accept. So let's get started. Woo! Yeah, it's really gotten nasty, hasn't it? It has really gotten nasty. I would say that I lost my train of thought there. As we look at this today, we're going to go look at the VIX, which is clearly spiking when we see this is selling pressure. Average volume is at 76. Current volume is at 116. We're 40 over. 40 million over, and we still have 45 minutes. It's likely to be 50 million. I think we're going to be at 160% volume. So clearly the things we've been talking about where we're like, it feels like there could be, there's a weirdness about it. The same things that had us, even though our posture had held up, and you can see up until today, this thing still looked fine. We're like, let's dial back risk. Let's ease up. Let's wait. Let's be a little bit more descript and a little bit more discriminate for what would have us take new trades. Most definitely. Give me your thoughts. How's everyone feeling? Were you able to shut things down? Were you able to keep some profits? Were you able to curb losses. At this point, we're going to have to wait to see how this plays out. Is it going to be one of these that stabilizes? Does it chop around? This is going to change our orientation on the market. Even though our market posture might not drop swiftly, I mean, it'll drop, but even this right here is not going to change my short-term trend score. Right? My short-term trend is still intact. If this thing can find some support over here, both GE and SoFi not breached stop loss or the support level, so holding on. Okay, fair. I like the thought process, PJ. Yeah, I think that makes a lot of sense. Okay, let's keep going. I'm actually going to jump right to the VIX here. It's a nasty break on the VIX. A nasty, nasty break on the VIX. So I admittedly, right through here, I scored this, but I did not score this. And it was a literal, immediate reversal. An immediate reversal. You bought the 19 call for a winner. Nice. Love it. We've been talking about what do we want to do if it breaks. If it breaks, it hadn't broken, but yeah, hopefully you put that on somewhere in this area, right? And caught that as it went on up. Very nice. So what's going to happen here? I am going to, hey, Vladimir, good to see you. I'm going to score that a minus 0.25. And that is hey, Scott, you missed this one. It turned by here. I probably should have had that. I should have put it on for this week. 1, 2, 3, 4, 5. Yeah. At the end of last week, I think I should have had that on. There's the next week's. And then this breakout here is clearly going to give us another minus 0.25. And so that's going to take us down to a 0.75. I think a 0.75 still feels right. That's the same score it was here when it spiked back at the end of July. Let's just see where we were at the end of July. I mean, at the end of July, we were at a 1.25 and it spiked up to that level. So, I think that actually makes sense. I'm pretty sure that's going to drop a full half of a point. Half of it because I missed an assessment that I think I should have assessed. The other half from today's breakout, pushing above resistance, pushing above the consolidation line that we have drawn. Long term, let's go back. Yeah, the VIX does not look good. That's a big spike, 30%, big spike today, as we would expect. Let's go back. So now we have a government shutdown with missing data. A Fed that apparently wants to cut rates based on employment getting worse faster than expected, despite inflation not getting better as needed, but without any new information. So we're going to expect next week's data, which includes CPI, PPI. We'll take a look at that here in a minute. We are expecting next week's inflationary data to be delayed. So it's kind of creating this bind for the Fed of like, do you adhere without getting extra information that says actually now inflation's even worse and we can't, right? I mean, trying to find the balance, if you will, between their objectives and mandates of supporting the employment market while curbing inflationary pressures. So we have that construct, if you will, of the Fed scenario. We have the government shutdown that is persisting. Yeah, I mean, it's now you add some additional trade war escalations. A lot of people talk about tariffs and they're like, well, tariffs haven't had that much of an impact yet. And people are like, well, that's because they keep getting taken off. But I don't know. So let me ask you this out of curiosity. Let's say that there is a $2,000 tariff dividend check. Is that a good thing? Do we feel like, hey, we just raised tariffs, which is a domestic tax on imports, in order to then give it back as a, I don't know, would you call it a stimulation or what would you call that? I don't know. I feel like it's just sort of disruptive to the business market, but have we gotten anything fundamentally better yet? It's now October. Are there any new, trade scenarios that we're like, man, this is fantastic, and it's a direct. I feel like it's just sort of a control policy that is, same kind of a thing. If you remember last administration when they did this, they took almost, I think it was like 90%. They took 90% of the money that was collected for tariffs, and they used it to give a bailout to farmers who were impacted negatively by the tariffs. So we're having the same thing, right? China is literally not buying a single soybean. And so, the soybean farmers are like, who are we going to sell this to and at what price? Which is likely going to need a placebo check, Jago says, right? Which is likely going to need then subsidies. So then we'll have to take some of the import taxes, also known as tariffs, and use those to pay. I don't know if that would leave enough for a tariff dividend check, which is like would we call that a tax refund then? Though not shared in the exact proportions paid. I don't know. It doesn't feel productive to me. I think we've seen the market show remarkable resilience, but it can only handle so much. If we start seeing, trade war escalation, more tariffs actually in place, which lead to higher inflationary pressures starting to show up, and I think we're a little bit careening. It feels like here. You're not seeing it yet on the charts. Maybe we're starting to, but let's analyze this. This is nothing to me. I would be fine with this pulling back to here and bouncing. That's going to maintain our score. If we pulled all the way back to here, I would probably take a little off, but that would still be positive. You can see, that would be, 672 down to 614. That's about an 8% drop. Let's say 615 divided by 674. Oh, sorry. There it is. 615. 674. 91 and change. So it's about. So if we were to get a correction, it would be down to about this level. So, yeah, I don't know. I think that could happen. I think that depending on how this looks, we could have a correction. Corrections don't tend to fall from the sky. They tend to drop, pop, finish. So that's what the correction tends to look like, is a double dip. Yeah, you can kind of see back here. That was our last. Now that's not true. This one was more. This one was a correction and then some. This one was straight to, like, that touched or just barely missed touching a bear market. That was almost a full 20%. Maybe it was a full 20 actually. 612 down to 486. Yeah. That one really just sort of came at us hard and fast. Also around tariffs, so something to keep in mind. But it did have also a bit of a double dip. Made money today buying puts, good, and that might be more the direction we look to go now. Right? 1, 2. That was just a little transition in there. 1, 2. Double dip. So whether it's 10%, 12%, does it, I would be hard pressed to think it would turn bearish that quickly, but we've seen it before. Yeah, I don't love it. This score is going to also stay the same. We're not going to try to preempt our market posture by predicting it. But I'm expecting at least a three quarters of a point drop. And I agree with David. Puts make some sense right now. If we think that there's going to be sustained movement, let's be ready for that. Okay, let's go to volume. Clearly, this has set a new standard for above average volume. And it was clearly a seller's day. Seller's day. Now what? We're about to lose these two. Then I've got tie, buy, sell. So this week is kind of a wash. Tie, sell. So now all of a sudden I have two sell days. One buy day. 1, 2, 3, 4. I'm gonna discount these because there's only a few days of those left. So I'm gonna say there's 1, 2, 3, 4. 2, 1, 4. I'm going to say that's a 0. That's a 0. We were at a tie. It's going to lose that tie because that was definitely a ramp up. This is now. I want you to notice. That we're going to be from here to here now. Oh, no, I'm sorry. That's wrong. From here, the start, to the end. And then we're going to connect the dots. And that's going to be our line. What's interesting is for a while there, we were talking about having a positive score and having a good amount of the actual action below the line. This is going to be a neutral score. I'm going to be like, yeah, this definitely feels like a 0, down from 0.25, where almost all of this is above. Literally everything is above except what? Except right now. Today. I don't know. That's an interesting one. What do you guys think about that? So I think volume is going to drop. Major market, or excuse me, this is going to stay the same. Though I don't know. Maybe we would. The low here is 659. The low here, if we're taking out that low, I might take a quarter point away here as well. Might lose a quarter point here. It's going to hold up fine here. It's definitely going to lose a quarter point on volume. Definitely going to lose a half a point. I think we're looking at a half of a point, maybe even a little bit more. I actually, as I think about it, and I make my prediction, I forgot to predict these last two. That's on me. But this time, I'm going to put us at a 4 1/4. I'm going to say I'm looking for a 1 1/4 drop, which means 0.25 here, nothing here, 0.25 here, 0.25 between one of these two, whether it's sector, major market, possibly both. I'm actually even going to say it could be both. So I'm going to say between a 4.0 and a 5.25. I think we're going to have a pretty heavy drop. Anybody else want to weigh in? Steven, Sandy, anybody who proactively looks at their score want to weigh in? I think it's going to get a bit nasty. So I think it's going to be at least 1 1/4. At least 1 1/4, if not 1 1/2. Stephen, you must have an inside track to the president's tariff whims, as this one was definitely influenced by tariff rhetoric. I feel like we're picking a trade war fight with China and relying on the fact that we're still bigger. And it feels like they're outmaneuvering us. The way that they're going to get soybeans from South America and leaving our farmers in a lurch. It feels like they have a stronger strategic plan for how to go about this. They certainly control their own messaging better than we do here, which makes me concerned for sure, right? Definitely makes me concerned. I agree. Score will change. Yeah. Okay. Yeah. I think it's a definite. It's just a matter of how much. There's a fluke chance it might only drop 1 point, but I think that's the minimum. I think it's a minimum of a point. I'm looking for more like 1 1/4 to 1 1/2. I think that major market could lose a quarter because we've seen some surge in defensives and a little bit of a drop in others. I think we might. Oh, sorry, that's sector. Major market. Major market's been at a heavy perfect score. So if there's any weakness that establishes, it's going to pull it back to a 3/4 of a point. For me to leave my score out of 1, it's got to be, it's got to hold up. John says, I think it's a tantrum dip. Okay, so is it a mini tantrum? and we stabilize next week? Or is it a broader tantrum and we're thinking it's going to be a correction and it'll touch a full 10%, meaning more of a double dip? I got to tell you, let's pray. Let us pray. I got to tell you, I'm leaning more towards the second, just based on how this week is closing and on what? And on the fact that it's not like without that we have a bunch of certainty. We've got the government shutdown. We've got lack of data. We've got a weird, like, this is the best economy ever, followed by, wait, there's a bunch of job weakness we weren't expecting, followed by, oh, it seems like inflation's ticking up. How does that lead to a rate cut? I think we find ourselves in a strange economic place to be, economic/geopolitical place to be. I don't know. I mean, there's a lot of like, well, wait a second. If this is the best ever, why is this happening? And if this is so great, why are we not seeing this here? If there's $17 trillion coming in, why are we not seeing an increase in jobs and higher rates of manufacturing? So the data story and the rhetorical story don't seem to be matching up, and it feels like the market's kind of like, wait a second, hold on, and that's where we find ourselves. I don't know. I hope I'm wrong. You guys know my preference is to be bullish always. Bullish markets are the best markets, easiest to trade, most profitable. It's an economic nor'easter, right? It seems like that something's happening. El Nino of the market, maybe, I don't know. Okay, so yeah, looking for that pretty good sized drop. Let's go look at our watch list. As we watch the carnage continue, look at us. We're at lows. At or near lows. It was fine. Everything's like, hey, it's a pretty good Friday. Everyone's feeling all right. Oh, shit. Oh. And then it's like, maybe oh, shit. No, maybe, oh, shit. Yeah, it's definitely an oh, shit day. Everybody's got a hold of their oh, shit handles. Yeah. Okay. Look at that volume. Really, really came in and damaged it. Goodness gracious. It is definitely a red day. Apple. Let me get a little extra space in here. Apple. I actually feel like if this stabilizes, look at Apple. It's not even on above average volume. I actually think this could put Apple into a tradable place back here around 240. So it's not like I'm like, oh man, the sky is falling. Look at Archer Daniels. That's a consumer discretionary, a Staples. We had seen a little bit of initial traction in Staples that didn't really play out. Now what? Now we're thinking it's coming back. So we're going to be looking at Staples, looking at utilities, looking at healthcare. I would say both of those are actually like, could be viable. Amazon, no. Giving it all back. ANET, if you held on to a piece, man, I'll tell you what, it was up there. It made some money. If you survived not breaking support, if you survived and were able to hold on to any of this, it produced. I mean, I wouldn't hold this through the weekend at this point. I wouldn't hold much through the weekend at this point. APH was one we were like, maybe, not yet, but now my thought is, can this come on down here and give us an actual entry signal Okay, let's pay attention to that. One that looks a little bit more like what we had back here. AVGO turned over very quickly. That one never materialized. Financials, we were like, oh, financials they look like they're not doing nothing, but hoping to survive earnings now. That's how fast it changes. Hoping to survive. Caterpillar, if you held, it looked like it was going to, if it looked like this, I'd be like, yeah, let's hold through the weekend and see if it gets a little more. Looking like this, it clearly hit resistance. If this is one you're holding, be careful why you're holding through the weekend. New trade maybe setting up out here mid to late next week. There's still things for us to keep an eye on. CCJ, nothing there for us. CLS, nothing there for us. COF, down. Coinbase. So if you remember, our target on this thing was 380. So you had a ton of time to get out at 380. If you pushed, you realize why with spreads we take 80 to 90% when we have 80 to 90%. It met the target. It achieved the vast majority of what it could possibly achieve. At that point, you were picking up nickels in front of a steamroller. Like, seems like free money, but are you sure? So I hope everybody was able to close that one on time. I don't know what it looks like now. Probably still making some money, but you gave most of it back. Cisco is, again, it actually ended up making a move, but if it can stabilize and hold the 50, maybe. Otherwise, I'm a no. Delta, gapped up, already pulling back. We'll see. DoorDash, I'm okay with DoorDash. I've got a little range here for this to come on back, find a trade. Yeah, next week, possible. Let's keep an eye on that. The Dow is down 1.67. The S&P is down 2.36. The Qs are down 3.07. And small caps are down almost 3%. Who's holding up the best? The Dow. That's exactly what we would expect. If things start to get a little bit worse, what are we thinking? We're thinking there's a good expectation of defensiveness. We're seeing it in consumer staples. We're seeing it in healthcare. And we're seeing it in the Dow. What's next? Where was I? DocuSign. Told you if DocuSign breaks below 67, I think the next stop is 50. We'll keep an eye on that and see. Maybe we put something on. EA, nothing there. Ford, maybe if it can stabilize. Maybe. Futu, no. Futu is a no. It's been a no for a while. I may just bop that off the list. It really was like strong and then just fell apart. GE, this is a tough one. It has not broken. You might not like it though. I think you could go either way. This is a discretionary call where you might decide not to ride. Gold is still holding up. Yesterday was nasty. Today, right back where it was. Google. Come on, Google. I thought we had something ready to go. And now you're breaking this low. It's got me a little bit concerned. Still above the 50 though, so we'll keep an eye on that, but not a trade. Nothing to trade there. Goldman, no. Robinhood, no. Although Robinhood has the best chance of a new trade out here somewhere. Maintaining leadership as a leading financial. This one still looks okay if it holds. IBM, pulling back. Looking for a new trade somewhere maybe in that range. Intel, a bit overextended. IWM. Trend is still intact, but a big sell day today. Levi. Oh, man, Levi's. We liked it. And the earnings actually came back favorable until they said but. Right? They said, we want 30. We're going to ask for 30. We got 34. And then they said, but. What was the but about? The but. The but was tariff related. So you can see what that looks like and why that is concerning. So, yeah. Okay. Okay. Netflix, we're almost there. Almost there. Levi's, yeah, no good now. Lumentum maybe on the pullback. If it can hold above the 50, I'll still keep an eye on it. LVS breaking down. Meta rolled over very, very quickly. Morgan Stanley down at the bottom. Microsoft. I think Microsoft, like Apple, look, hey, if Microsoft and Apple can hold up, that gives us hope of technology surviving this thing. So that's something to be thinking about. Micron's still staying pretty bullish. Netflix. I would say for me, Netflix is still viable as like, hey, would I be thinking about this? Yeah. It got this pop. Now what? Now I've got all this in here where if it pulls back and gives me one of these, that higher low is enough. For sure. For sure. Northrop Grumman. If I was in it still, I'd be taking some gains. You've got earnings out here. You're on the weekend. It looks like it's rolling over. Who knows what's going to happen? NVIDIA falling apart like everything else. PGY continues to break down. PLTR, no. QQQ, big one down. Roblox trying to hold up. You can see how it's really nervous about that gap right there. I feel like this thing's more of like a bear flag. And then if it breaks, it's going to head on down towards maybe this area next. I mean, when you look back, this was fantastic. And then we got into that sideways chop. And that's what we've been seeing is a lot of sideways chop. Sometimes we get like anchoring bias to an old trend. We're like, oh, but the trend is so good. And then all of a sudden you're like, wait, is it? No, it's not so good anymore. It's actually significantly dialed back. Reddit still struggling, still barely hanging on. Let's go Rocket Labs. Yeah, I would imagine if you traded this, you did fantastic, but you're done. This is done. It gapped up, it ran up, and then it's just been selling off since. That's a lot, especially after the move it just had. Don't give it back. Silver still holding up. Still holding up. SoFi, same kind of a thing, right? Now, if you took some and then tightened to stop and you're out, you'd be thinking, I'll trade this again here. If you're still in it, you're thinking, hey, this thing could reverse, hasn't broken support. I mean, it's overall better than some financials, but not great when it loses 7% on big volume. So that's a tough one. SPY. Well, we're off the lows, a titch. Tesla. Still a possibility of setting up, but waiting to see confirmation of that. TSM. TSM has earnings not too far away, but otherwise, I'd actually be thinking to myself, this could be a viable opportunity coming in here. But we'll wait and see how earnings go before making any decision. Uber's dropped. Was sitting up here near 100, and then all of a sudden we're right back down. That's an interesting one. I don't think Melody's here to discuss the covered call. Upwork, trying to stabilize down here. I need one of these at this point. Visa again. Don't count out Visa. Visa is Visa. It's an 800-pound gorilla in the credit space, and right now I would say it's manipulating for some type of a reversal scenario to look for the next trend. So yeah, I still see viable opportunities setting up for next week. Don't think that we won't trade. We will. VIX is still popped near the top, pretty high up. We'll keep an eye on it and see what we think it is going to happen going forward. That one's had a hard read, and we've said, look, it's sort of veering along here. Then it broke. Walmart, nothing there yet, but maybe a sneaky reversal trying to come in here. I don't know. It's tough. Real quickly, the XLs, XLB, materials are down. Communication services down. Energy way down. Financials, industrials, technology. And then look at staples. Staples held up. Utilities held up. Healthcare, not as much, but I would say going into next week, we definitely have some staples to think about. I think we're looking at utilities as a potential. Maybe healthcare. What does that tell us? That's where I'm saying I'm seeing and feeling some measure of defensiveness coming through the way that the sectors are in rotation. Do I think I can post it today? Absolutely, I'll post it as soon as we're done. Yeah, and I'm not saying I'm like positive, like, hey, everything's great. I'm saying, hey, we've still got some okay underlying fundamentals holding up. We've got some strength in some charts that we're like, if this gives signals, I think we could, right, come out of this, and maybe it is just a little bit of a market fit, not anything worse. A small tantrum. So, I mean, I definitely don't want to be doom and gloom. Right, the sky is falling. I mean, certainly there's plenty that we can see. The GE chart, yeah, GE is right at support. So it's kind of a judgment call. If you didn't like the way this thing tried to turn and rolled over, you might have closed somewhere in here. If you're really keyed in on support, you might think, hey, this thing could easily give me a doji followed by a day, followed by a move. And with it being a spread, we would actually be okay with that. So I think this one's going to depend on how tight you were with stops. John just said he stopped out. How tight you were with stops and what your thoughts are orienting around support and resistance. That's a judgment call. That's a discretionary, hold or sell at this point, I would say. What did I not talk about? Healthcare and still in closed mind. There you go. Right. And then there's consumer discretionary getting smashed. Things got smashed. It was a bad day. We didn't love it. Still had some good trades recently, Yeah, I think our posture is going to drop 1.25 to 1.5. Indeed, but I've had a great month. Awesome, Sandy. Love it. Make sure you share. Make sure we hear from you. A great month is phenomenal. So, and now what? Now we dust ourselves off and we say, what's next? Now what? And now what? And now what? And now what? And when it comes to now what, we talk about record keeping. Great time to make sure your trade log is up to date, that you're getting all the data you can from the experience generating as you trade. Trading without record keeping is like driving blind, man. You're going to end up in a ditch real quickly if you don't. Yeah. If you don't open up to it. Tom Lee was on CNBC, said we rarely get market lows on Friday, so look out for Monday. So I don't know. I could go either way on this one. There's times where we have such lows that we have just like a knee-jerk bounce back, and we just even get 0.5%, 0.7% back, where it's just like, we're still not sure the overall read, but it was a little bit of an overreaction. Or we could bottom out even further, then come up during the day. Yeah, I think there's a lot of uncertainties right now. And so, as we've been saying, even though our posture's held up pretty well, there's just something about the quality of this market that's had us dial back risk and positions. It's something that we've talked about the last 7 to 10 days. I feel like it's been the right adjustment. So there you go. That's my story. So anyway, I'm glad to see a bunch of more people showed up. We only had 2 or 3 of us for the first 5 or 10 minutes. So the rest of you, I'm glad to see you. I'm glad you made it out. Yeah, look, it's this could be the start of a tough time, or it could just be the setup of the next window of trades. Let's not make judgments. Let's be ready. Let's be water, my friends. Have a great rest of your day. Have a great rest of your day, and I'll see you guys Sunday morning, 11 a.m. Eastern. Enjoy your weekend. There's the closing bell. As always, happy trading.